At what point do Fed rate cuts go from being a positive for the stock market to being a negative?
I think the stock market wants another insurance cut. Honestly, they prefer that. I actually prefer that. I am actually in sync with James Bullard, who, as you know, dissented in last week's meeting in favor of a 50 basis point cut. Of course, he didn't get it, so that means let's have another one on the October 30th meeting. I think that is definitely called for, and I think the stock market wants it. Now,
what
are
happens,
we going to get it or
what
not?
Happens when we go?
Is it?
What
Yes,
happens when we go
please.
beyond that, though? At the moment, we're talking about a mid-cycle slowdown. Everybody's pretty comfortable with that, as you say. The cuts, therefore, are taken as a positive. But if the Fed goes beyond 2 or 3 cuts, we've gone beyond a mid-cycle slowdown, a mid-cycle adjustment. It's now the end of the cycle, and that's what the Fed is trying to mitigate. What point? Where do we reach that point? Is it 1 more? Is it 2 more? Where is that point come when the market goes, you know what? Actually, the Fed's trying to stop something a little bit more damaging than maybe we had priced in.
But I think it's going to be the reverse. I think they would only go 1 unless things got very weak. So I don't think this Fed keep on going would be a signal to everyone else they see problems. They don't see problems enough for more than 1. In fact, as you know, majority from the dot plot don't even want more than what we had last week. So the only way we would get 2, 3, 4 is if the data in the U.S. started coming in very weak. And of course, that's not good news for equities, to say the least. But I don't think it would be the Fed moving and people saying, oh, my God, it's the Fed see something we don't. The Fed at this point doesn't see anything that we don't. So, again, further moves than 25 basis points, in my opinion, would only come from much weaker than expected U.S. data.
So, Jeremy, do you see that coming down the pike at all? Today, for example, we saw manufacturing holding up very nicely. Services were a little soft. But we had a downgrade of the entire steel sector, and U.S. steel right now is up 0.8%. It appears that even with the sporadic warnings we're getting, the economy seems to be holding up.
Yeah, it does. The U.S. economy is growing around 2%. Not great, but not terrible. And very close to the Fed's long-run estimate of what growth is, which is 1.9. So, you know, at this particular point, we're doing okay. Now, of course, Trump wants more. He wants 2.5, 3, or over 3. But right now, we're just about on target, moving at that level. And I don't see any signs of deterioration. I mean, we take a look at those jobless claims coming every Thursday. That's an early warning sign. We see nothing there. In fact, as you know, the Bloomberg Economic Surprise Index for the U.S., as well as Citibank's and others, have actually reached yearly highs in terms of data coming in better than expected. Yep. Again, not great, but better than expected. So we're just not seeing anything in the tea leaves that points to a significant U.S. downturn, not now.